I've been thinking a lot about the gold to silver ratio. And, you got Goldman Sachs and JP Morgan forecasting $4,000 gold by next year. I think that's pretty reasonable, actually, on many levels. But assuming that plays out and the gold to silver ratio were to get to 50 to 1, where it's averaged about 45 to 1 for the last 150 years. At 50 to 1, which is very conservative, at a $4,000 gold ratio, that puts silver at $80 an ounce. I mean, you're talking a double, easy double. And so when I think about where silver could ultimately go, there are so many things that are screaming silver and its value right now. UBS just raised its target to $42 an ounce. That's about an 11% increase. But when you look at all of the things that have been happening, to me, whether it be the increase in the lease rate, the lack of shares available to short or to buy to cover shorts on SLV, the massive delay from T+1 settlement in London to T+8 weeks in London, the huge deliveries. When you look at the distortions that we find in the silver market, when you look at a simple returning to 50 to 1, even if you went to 70 to 1, where it was just a couple of years ago, that puts silver at basically $60 an ounce. That's a solid, 50% gain almost. So you're talking about, I think, the value of a generation. And it seems that things are changing, the way that the market is moving. We're not seeing these massive sell-offs. We're seeing consolidation, choppiness, volatility, but the strength is something that is very different than what we've witnessed before. I'm very, very, very hopeful for what the rest of the year brings for the price of silver. I find it interesting that the LBMA came out the other day and warned of counterfeited metal, which they said distorts prices by creating artificial supply. And you think about that for a second and think this is the institution that's trading billions in unallocated bullion contracts unbacked, selling claims on gold and silver you can't deliver. Doesn't that kind of sound like you're creating artificial supply, counterfeiting in a digital form? I don't know. I'm just throw that out there. I laughed when I read that. But again, UBS is saying 38 to 42 through September 2025. They're talking just in a month through June 2026. So they're basically saying we're right there. By the way, for the people who we're recording this on Monday, the options expire today. So I expect today to be volatile, just like Friday was and Thursday, but I expect it to shoot right back up tomorrow. We'll see if I'm right when the next contract hits the board. You have to wonder, is it a conspiracy or is it reality when you talk about when Chris Powell says there are no free markets, just manipulations? The traders suck in the speculators, and then right at the end, they smash the price so that the options expire worthless. The big banks get to keep the premium on that, and then it goes right back up. They rinse, wash, and repeat. But this is a game that's much more difficult to do so. And it kind of reeks like we're getting to the end of this game. We've heard that before, but the level of spread in the exchange for physical jumping up 250% last week, the no shares available to borrow of SLV, none, when there's usually millions, the 7 or 8% lease rate, highest I've ever seen, the T+8 weeks, the delivery, things are changing, and it's as dumb as a mud wall to continue this game. I think they know that. I also want to talk about perception. I wrote down homes are getting cheaper in gold. Now, homes aren't getting cheaper, but they are in gold. And, people talk about this real estate deal where homes are so unaffordable. They're not unaffordable in gold if you've been holding gold, because measured in dollars, you're getting crushed. Measured in gold, you're winning. Since 2005, it's fallen off a chart. It's gone straight down. The amount of gold that you need to buy a home, it's at almost all-time lows or very darn close to it. So in other words, gold is keeping pace. The dollar is not. This is the point that needs to be understood, is that gold is not here to make you wealthy. It is wealth that keeps pace with inflation. Right. So if the average price of a house is like $400,000, you're talking what, 130 ounces of gold buys a house for you right now. So, what would it have been if you look? I don't have the graph on my computer here. I wish I did. It didn't transfer for some reason. I thought I had it on there, but it's a falling just like this, where in gold ounces, if you would have bought gold and put the money instead of in the bank, because you're going to buy a house in 5 years and you put it in gold, it's gotten cheaper and cheaper and cheaper and cheaper every single year. Even with house affordability going stratospheric, no one can afford a house any longer, it seems, with the cost of money and the increase in the price of houses.
Sometimes I think if aliens landed tomorrow and took a look at our financial system, they'd get back in their ship and say, nope, too crazy. We're going back to our own galaxy where at least math still makes sense. Because what's happening right now in the precious metal space and the monetary system at large is stranger than science fiction. And yet, if you zoom out, it's also the most logical sequence of events you could expect when a government spends decades debasing its currency and papering over reality. Let's start with the obvious elephant in the room, the gold to silver ratio. For those of you new to the concept, this is just the price of gold divided by the price of silver. Historically, over the last 150 years, that average has sat around 45 to 1. When the ratio gets much higher than that, like it has been in recent years, it's a neon sign flashing silver undervalued. Today, we've got major banks like Goldman Sachs and JP Morgan forecasting $4,000 gold by next year. I actually think that's reasonable. That's not me being pie in the sky. That's me looking at the macro data, the debt market, and the way central banks are behaving and saying, yeah, that's entirely possible. Now, if you take that $4,000 gold forecast and apply even a conservative 50 to 1 ratio, which is still higher than the historical average, you're looking at $80 silver. That's a clean double from current levels. And that's me being conservative. If we went to 70 to 1, which we saw just a couple of years ago, you'd be looking at $60 silver, still about a 50% gain.